Hello, everybody. Welcome to episode number 7, 1, 2, 3, 4, 5, 6, 7, 7 of the Traders Podcast here at Courage Pays Better Than Fear Trading. I am your grateful host, Jeremy Hritz, back from my vacation in Turks and Caicos. Had an opportunity to spend some time with my wife celebrating our 10-year anniversary. And the first time we tried to go, we actually were sitting on the plane for 4 hours. It snowed that morning, and we ended up having to cancel the entire trip. Rebooked it, but we're able to make that happen last week. It was phenomenal. Definitely rested and relaxed. That's why I didn't have a podcast last week, and just been slowly easing back into real life from there. And we actually took the kids to Hershey Lodge. They have some off-season cool activities, so we did that after we went on a vacation for ourselves. And now I'm back and ready to share some value with all of you here on the Traders Podcast, episode number 7. And today we're going to talk about the importance of a trading plan, what a trading plan is, how to set up a trading plan, and if you're looking for a model or a template on how to design a trading plan, just comment on this video, send me an email, couragepaysbetter@gmail.com, and I could send that over to you. But I'm going to talk through all the details about what that includes here in today's episode and why it's so important and why traders who are profitable follow a plan and traders who don't are ultimately planning to fail. So that's what we're going to get into today. Before I jump into that, just an update on the markets. Man, things are just cruising. If you have been paying attention to what has been happening in the markets, especially this week, Wednesday evening, February 21st, it's something I probably talked about here on the show. NVIDIA reported their earnings, and they just crushed the estimates that Wall Street had put out there. And as a result, their stock skyrocketed, I believe, $115. And it was just an amazing move. It took the entire market with it. It zoomed higher. The S&P 500 hit new all-time highs. The Qs, which is an index fund for technology, it didn't hit all-time highs on Thursday, but it did today briefly before pulling back. The Dow Jones Industrial hit all-time highs. So NVIDIA, one stock, had the power to really just drive the markets sky high. And this came after 3 days of selling that really kicked off Tuesday of last week, whenever the inflation report was released. And what those numbers indicated was that inflation was still sticky. It was hanging around. And then on Friday of last week, there was another inflation report. It was the PPI report, I believe, and it was negative. And it indicated that inflation was being sticky. It wasn't coming down, and the market makers did not like that. That triggered selling Friday of last week, Tuesday of last week, and Wednesday into NVIDIA earnings. And it was NVIDIA earnings that ratcheted things up higher, and the bulls are now back in charge. Things are going up. But keep this in mind. The market has been in a strong bullish trend since really the beginning of November. And we are due for a correction. And what do we mean by a correction? We mean a pullback of about 10%. I would say anywhere between 10 and 14% from the highs. So the highest price that we hit right now on the SPY or the Qs or the Dow Jones Industrial, what is a healthy thing to occur is for that to pull back and correct by 10 to 14%. And so that should be coming. It's so hard to call the top. But I'm telling you this because when it happens, you're going to see a lot of people on the news, or if you watch CNBC, CNN, Fox, whatever it is that you watch, people are going to be saying, oh, the economy's imploding, the market's tanking. No, this is a natural part of the process in the stock market. Things go up, they pull back, they rest, people accumulate shares, it goes back up, and it repeats. And we are in a bull market, and that move, that correction, that pullback should be coming soon. Who knows when? Again, you don't want to try to call the top, but just to give you an update of what's happening here in the markets. But it's definitely been a lot of fun, and hopefully you've been able to take advantage of some of that action. And really quickly before we get into trading plans, very excited. This coming Monday, going to be starting my profitable swing trading course. Congratulations to all of you who signed up for that. Very excited to teach that class. It's going to be a lot of fun teaching how to swing trade. Remember, swing trading being any trade that lasts longer than a day. So can't wait to share my knowledge with everyone on that. And with that said, let's jump in to talking about trading plans. So what in the world is a trading plan? Well, I'll tell you this. If you are planning on trading the market, or if you're planning on investing, you need to have a set of rules that you follow that guide and dictate how you are going to trade. You see, a lot of people think of trading that you're just buying and selling, you're selling and buying, and you're just doing it on a whim. But that's not the case. Profitable traders, successful traders, effective traders have rules that determine when they will purchase stocks, where they will sell their stocks, and conversely, if they're shorting, where they're going to sell, where they're going to buy back. And it's those series of rules that are going to guide and drive behavior whenever a trade is not working out in your favor. And I talked countless times so far in the short lifespan of this podcast of the importance of discipline and emotional composure in trading, because rarely are you going to get in a trade and it's just going to go directly to your target. It doesn't work that way. Typically what happens is, let's say you get into a bullish trade, it's going to go up, it's going to pull back, you're going to freak out like, oh my God, what do I do? And then it'll start to come back up again, it'll pull back, you'll freak out again. And if you don't have those rules in place in terms of what do you do in those moments, you're going to do whatever it is that you're feeling at that given time. And when you're making those emotional snap decisions, that's what's going to lead you to losing money. Because what you're going to find is a lot of the times before a trade is going to go to your target, what it's going to do, there's a thumbs up that's showing up on my screen. That must be like some crazy AI stuff. But what's typically going to happen is the stock's going to go up, it's going to pull back, and it's going to chop around. And in that moment, let's say that your trade's at a loss at that time, many traders, especially newer traders, will get scared and will exit the trade prematurely. And when that happens, typically what will pan out, and this has happened to me several times, is that stock will just go bang right to your target. And had you just been a little bit patient and had waited a bit, you would have ended up profitable. But that's where the importance of having the trading plan comes into place, to have rules set up that say specifically language like this. When I enter a trade, I have my entry point, my profit taker, my stop loss. I am not allowed to exit a trade until X number of candles have passed or X amount of time has passed. And what that does is it provides you with clear targets that tell you that, hey, once this condition has met, then sure, I can exit the trade. But if you're exiting the trade without having some rationale or logic behind it and you have planned it in advance, that's not going to lead you to profitability. And so that's why a trading plan is so important. It's having those rules that dictate and guide you towards success. There's that thumbs up coming again. I don't know. I don't know where that's coming from. That's kind of freaking me out like a ghost or whatever. I don't know if you guys can see that, or maybe I'm just seeing it here on the screen. So trading plan, your rules. Now, in a trading plan, you should have rules that say, okay, I trade this specific time frame. For me, I trade from 9:30 a.m. to 11:30 a.m. every day. Those 2 hours are exclusively devoted to trading. I'll hop back on the computer at 2 p.m. and check to see if I have any setups, and that's it. And you should clarify and define, all right, this is when I'm going to trade. So you should have a rule about that. You should have a rule related to how many trades you're going to take in a day. For me, I try not to take any more than 2 trades. And really, I don't like to be in any more than 1 trade at a time, though my rules say I can be in up to 2. And then you should have rules that help you lock in profits. So one of the rules that I'm very big on, and I always teach to students, is when you have a trade that runs 50% into the money, force yourself to make a decision about whether or not to exit half of the position so that you're locking in gains that the market has provided. And then what I also do is move my stop loss into the money. So in the event that the stock does pull back and it doesn't continue to run, I get stopped out for a smaller profit. But again, these are all the things that you can put into your trading plan that will guide you and ensure that you're profitable. But the most important thing of all is that when you're doing the same thing over and over and over for every single trade, you're able to look back on your performance during any given month and determine what it was that either hindered your success or aided your success. When you're doing something different every time for every trade, you're not going to know what it is that you need to adjust or need to improve. And that's why doing the same thing over and over and over will let you know which variables you're going to need to tweak for the next month. And we're getting ready to come up on the end of February. And what I'll be doing in the days leading up to the conclusion of February before March is reviewing my trades, reviewing my profits, my losses, reviewing what I did well, what I didn't do well, and then I'm going to update and improve my trading plan. So then when March 1st hits, I have a whole new updated set of rules. I have my goal set, I have my targets, and I'm ready to implement that plan for the entire month of March. And then you guessed it, at the end of the month, I'll do the same thing. I'll reflect, I'll evaluate, I'll update, I'll improve it, and I'll have a brand new plan for April. But the reason I wanted to talk about a trading plan here on the show today is because if you're just new and getting into trading, you have to have a plan. You have to have a set of rules that's going to guide and drive your behavior. And if you don't have one, let this be the call to action to you to start now and to draft your initial trading plan. And if you'd like some assistance with that, I do have a template completely free. Just hit me up in the comments, say, hey, Jeremy, I'd like to have a copy of that template. Give me your email, or you can email me at couragepaysbetter@gmail.com. Just say, hey, I'd like to have a copy of that template. I'll send it over to you. And to take it a step further, if you'd like to complete it, fill it out, and send it to me for feedback, I'd be more than happy to give you my insight, evaluate your plan, and help you out. So if there's anything to take away from this today, for all of you who are taking this journey into the world of trading and investing, have a plan. If you're going to be successful, you must plan to be successful. And if you don't have a plan, you're planning to fail. And that's going to do it for episode number 7 of the Traders Podcast. Very excited to be back with everybody here this week. We'll be back on a regular weekly schedule now, since I am back from vacation. I'm excited to be here with you all, excited to talk all about markets. I do have something new that I'm going to be launching on the site here. It's going to be a daily, or it might be every other day market review recap. I'm excited to provide that to everyone. That should be coming here pretty soon. So be sure to check that out. And if you're interested in learning more about trading, if you want to have a coach or a mentor, let me know. That's what I do. Remember, I'm an educator at heart. I'm a professional trader. I merge those two. It's a lot of fun to teach people how to do this and to make money. So again, hit me up via email, couragepaysbetter@gmail.com. And I hope everybody has a great weekend, and I will see you back here next week for episode number 8 of the Traders Podcast. Take care, everyone.